Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to another beautiful trading day, retail trading team. This is Master coming to you live with your routine briefing. And it has been another pretty textbook day in the Spoos land. That is the underlying I was involved with today. And we're going to spend this routine briefing reviewing a few of the setups as well as stats that really led to what I think was another very easy trade for today. So we've had 3 days now, I think, of fairly textbook price action. Well, 2 days at least. So the day before wasn't necessarily the best. It was a really nice trade in NQ, yet it was a little more deceptive, whereas the past 2 days I think have been pretty simple. So we're going to just talk about what happened today, look at the price action, and we will go from there. So let's first start off by just reviewing the routine warm-up and looking at what was choreographed in the first 30 minutes or so of the market and what happened. So this document, along with all the other resources, are available in the description of this video if you want to go check it out. And another document that I will reference throughout the day here is this routine day trading document, also available in that resource folder. And this is this Occam protocol, Occam strategy. It's not only an NQ strategy, so we're going to go ahead. Hey, as my cat scoots on my rug. Okay. We're going to go over that. Lost my train of thought. So anyways, what happened today that was the best tell, I think, for me? So a couple things we're going to be looking at Twitter. Really the main thing, just looking at this warm-up document itself, was that 100% net short overnight inventory. Almost always, especially net short versus net long, you do see an unwind early in the session, usually between that 9:30 and 11, where they do try to test the close from the day before. More often than not, and especially after a really strong day like yesterday, especially after breaking out of such an extremely clear, I would say, technical pattern, you often see that unwind. And we obviously saw it. In hindsight is 2020, as they say, yet we had a little bit of chop first. So you did have that open auction. It definitely was an explosion right out of the gate. Yet, again, I think it was pretty clear. So before going over the day itself, I just want to go through my Twitter here at Routine Trader. As I always plug in these sessions, I just want to go through the important points here. And I'm doing my best. It can be a little bit tough to be trading as well as staying current on Twitter, but I'm doing my best to kind of keep this as the primary communication as the day goes on. Before these briefings, I like to do these briefings after the trading session, just so I'm not focused on the wrong things going into the day. So I will continue to try to keep these Twitter updates current and relevant. So really the main thing, more important than anything, I would say, I have no idea who this person is on Twitter, yet I really like the stat. I didn't backtest the stat, so I did take this person at their word. It makes sense. I stalked their Twitter a little bit. It seems that they know what they're doing, so I like the stat. So what is the one thing I'm looking at here was an 84% chance of a higher high tomorrow. And if you recall from yesterday, I'm going to go point this out in a second, the TPO itself, I think, was really telling. So 84% chance of a higher high, given that it was triple distribution. And as mentioned yesterday several times, on Twitter the single distribution, singles being, if you want to get the proper definition, I recommend going to print Shadow Trader. I think it's here. Here we go. I recommend going to Shadow Trader really for a general glossary of all these TPO terms and various terms. We'll go ahead and pause this. Toucan, excellent app. This is a good way to kind of get an idea of what singles are. And really, all I see them as, and you can see right here, is emotional buying or selling. It's just a sign of emotion. And yesterday we had 7 of them at one point, which I cannot remember. So a really good tell there and a really good confirmation of that triple distribution look. So we will see what happens. Let's see if we've made a higher high yet. We have not yet. We're pretty close there. So it seems that this stat is pretty sound. So just looking at that profile real quick before continuing on, we'll go to yesterday's TPO here. So yes, you can see again the emotional term. Yet what usually happens when you see this kind of emotion is, again, you see that at least retest of the high. We haven't gotten the full retest yet it's no surprise here given the look of this profile. So why is it triple distribution? So you have your first leg here near the bottom. That's really where the POC was at the close of yesterday. So the majority of the volume and interest was lower in the day, and then we started to move up. You created this other block of singles right here, creating your second distribution, and then finally singles, and where we closed is that third there. So that is what you call a triple distribution look, and that stat I will add to my stats and be looking for that in the future. So that's what I had going into the day. I liked that look. I liked the 100% net short overnight inventory, and therefore I started off kind of with that long bias. So keep in mind, it's very important to be reactive more than predictive. That is the slogan and mantra of any good day trader. Yet today, again, I came in with that bit of bias, just given that stat, and it worked out. So if you looked at so on top of all that, if we did come into this morning without knowing any of the various stats or really looking at anything, huge red flag for me here was what's going on in these overnight TPOs. All those red horizontals are strong selling volume, lots of shorts, and what happened to those shorts? They got trapped. That's what a poor low is. It's weak hands at the low. And so what that is, if you start to get any push, that is kindling for the squeeze fire. So that was really an excellent confirmation of everything. So as the day progressed, I hopped in pretty darn early. So we'll look at my trades when we go to the replay of the day. Actually, I'll just show you real quick so you can see what time I got in as we go on here. Did I have show times along the bottom? I did not show times along the bottom. So let's pop back to Sierra, and we'll put on the show order fills for today. So I got in right at 9:35, 9:34, 9:35. So I did hop in early. I hopped in, and when we go through this, I'm going to show you the perfect trade. But again, because I did have a bit of that bias, by the way, we're bull flagging here now. So looks like we are going to test that high, perhaps even during the briefing here. So yeah, so I popped in early, saw all of that, but the perfect trade really was the reclaim of that 44.02 level, and we're going to look at that as we replay the day here in just a second. So besides that, just reiterating the squeeze fuel, and then you can finally see that these were my entries for the day. So I just wanted to review exactly what I was looking at, and now let's go through the day itself, keeping all other charts aside because price action is the most important chart of all. Keeping all charts aside, we're going to see how the day played out. So once again, just to reiterate, I'm looking at these levels. That's why they're highlighted. I'm looking at this strategy, Occam, and a couple tweaks to it. So I do leave a runner that I haven't included in here because, again, this is the back-tested strategy without the runner. Still works excellent. As you can see here, this is the Occam trade log, not including today. And again, it's just getting better as I make little baby tweaks. But this is the general strategy that I'm watching. If you want to go that document, routine day trading, and it's in that routine trading folder. So let's get rid of this and let's go through our day. Jumping into the sim here. So one more note before I get going. I might mention this again. I did get stopped out on this little stop run here, and I think that's some good data around just moving that stop to break even. I spent several minutes trying to be clever and find out where that lower low would be that I want to be out of it. And so I just chose this 15-minute candle here. And what I do, I got nearly bottom ticked, trying to be fancy. So I think for those runners, especially if you're opening with this is MES, if you're opening with, let's say, 30 contracts, just leaving that one runner, give it some room. And I think I'm going to move that to break even. So one little lesson today before we get started. So yeah, let's jump to the sim and see what we got cooking for today. Okay, so open. Turned out to be an open auction. Yeah, what happened here on that first candle is we opened at about, we'll say 40, 46.06, 50-ish, tested the high from the prior candle, and then we rejected. And so what that's telling us is that the momentum favors the bears until we can pop at least that local high. And that's the first thing that I was thinking right out of the gate. And let's watch what happens. Bit of continuation. Yellow. Continuation. Opening up that opening range and nearing our first trend line here. Nearing our major zone. The zone is from, let's see, 4,400 to 4,402-ish. That is a big support, and that's why it's colored green. These lines were all in place before I began the day. I do this document after the prior day's trading session. So everything's all in place. This is not confirmation bias. So here's what's going on here. I popped in here. So again, early entry because it's the first test of that major zone, testing that trend line. I felt confident in popping in and just putting a stop below what I felt was a major level from yesterday, which was 95.25. That comes from the 4-hour chart, by the way. It is 1.25 points below the low, just kind of where I like to put my stops, is looking at those higher time frames. So I'm in here, and in fact, let's go back a couple minutes and get my entry going, and we can see how it played out in real time. Okay, so 44.75, but close enough. Let's get going here. So got in there. First target, which is where I take off most, is 44.13. Today I let it ride just a little bit, but if we're showing the pure mechanical play, let's look at it that way. So stop, like I said, that 95.25, and we want to take off 75%, about 10 contracts at that first level there. So that was my trade. Got in there, targeting 44.13, first level up, stopping at around 95.25. But let's look at the perfect trades. I'm going to go ahead and flatten out here. And the first mistake that I made mechanically, again, I don't regret this. I wouldn't say that this was necessarily a mistake due to the confluence of other factors. But if you want that perfect trade according to the mechanics on that day trading document, you do not want to fade a 15-minute candle. So let's look at when that real, true perfect entry would have been. And you're going to see why I think today was that perfect setup. So you have all the stuff we talked about in the beginning of the briefing. You had all the inventory, the various statistics, but just looking at raw price action, you actually did have another perfect setup. So remember, we're not fading that 15-minute candle. We'll speed this up just a little bit. Not fading the candle. You want to wait for it to close. Okay, so we close red. So tentative entry above here, if you so desire. You may have also gotten in when we were turning green around this 944. Again, not the perfect entry, but perfectly acceptable, I think, just given especially how close that stop is. But we're going to keep going. We're going to look at, like I said, that perfect entry. And then we're going to talk about why. Okay, so what happens here? We lose the trend line, pop deep into that primary zone there. Zoom out a little bit. Get that double bottom type look and make a higher high relative to that candle. But this candle's still red, so we're going to wait for that to turn green, and then we'll pop in. And I'm going to point out one more thing when that happens. waiting for the candle to turn green, waiting for that signal that you can see in that routine day trading document. Boom. Turns green. We're in. Okay, so that's a perfect entry again. 44.13 original target. 95.25 stop. And if you look at this price relative to where I got in at 44.0475. This is one tick higher. So it is the ideal quote unquote perfect entry, yet you only lost a tick. And why is it the ideal perfect entry? Is because we are reclaiming this key 4402 level. So I think I mentioned this in a tweet yesterday, and if I didn't, I mentioned it somewhere. This 4402 level where we first bounced here, but I'll go ahead and draw a horizontal, was the major support. And what is going on here, confirmed with the signal, confirmed with the candle, is a reclaim of that major support. So I like to give it between, let's say, 3 to 8, depending on volatility, 3 to 7, we'll say, points to show acceptance. With this 3 points exactly from that low, you have the reclaim, you have the signal on this chart, and you have a nice hammer forming on this 15-minute chart as well. And you have everything we talked about earlier, all the positioning before the session started. So perfect reaction, perfect setup, and let's watch what happens from here. Speed it up just a little bit. More. Boom. The majority of your positions off at 10:31. You took 6 points of heat at most, and then your runner is running. So 13 first target, next is 21. At 21, take off all but that final runner. It's up here. And like I said a little bit earlier, I think the ideal mechanics for that runner, again, if you're using, let's say 13 contracts, just leaving that little baby runner all the way to break even. Speed up a little bit because we didn't quite hit it here. Boom. So about a half hour ago, your entire position's off except the runner, and now you're just chilling. Let's see where we are right now. So we've made that higher high. Again, confirming that 84% probability. Perfect setup, perfect follow through, and you still have that runner from 4405. So even with one MES contract, you are now up. Second. Yeah, you're now up an extra $100 on top of that. So textbook. That is all I have to say about that. So excellent day going so far, and that is your brief run through. I'm going to go ahead and exit the simulation mode here, clear the data. So the way that you manage this runner, like I said, is really the best way to do it is until it stops out at break even. No fancy stuff relative to that. And we're riding. So like I said, I got stopped out here, so my stop was at 10. I believe the low was 925, typical. Yeah, 925 was the low. So I am not involved in this because I tried to be fancy with that runner. So just leaving that runner break even adds an extra $100 to the bottom line, assuming you're using MES. Some of you, I'm sure, like my friend Mr. Juiceball there, might use full size 13 contracts. And yeah, so now you're running breakouts continuing. Again, So we'll get rid of this. Dotted trend lines are just not as strong. So if we look at a big picture, what happened today? So I have something in my throat. Stand by. Perfect inverse end shoulder, retest of our major level, reclaim, as we talked about on that 1 minute chart, and you're off to the races. So that is the day. So looking forward, major levels are now, and I will update these as others become relevant. Your major levels are now that 35 holding as support, and now we're targeting that 37 level next. In fact, I'm trying to see where we are right now in the SPY, and we are there right now. So I would expect some pullback here. This is at 37 level. Once we do break through this, so again, I'm expecting a pullback. I'll be really surprised if we just keep hammering higher. Once we get that pullback, retest. Where's a good spot to retest? Probably somewhere around where we broke out here. We'll see what happens. Once we retest that, now we're looking toward the highs. Simple, textbook. Love it when the market behaves itself. So that's what we got going on. I will keep you all updated as if and as anything else becomes relevant. And I hope that you are finding these briefings helpful. Again, you can see that strategy in that routine day trading document. I just realized I didn't actually show you the specific pattern that I'm talking about when I say reclaim. So let's go here real quick. Right here. I call it demand grab. I'm going to get this thing cleaned up. Eventually here I'll do various videos just talking about each specific pattern, but this is your textbook demand grab right there. So note this picture, look at the 50-minute chart, test, pop through, breaking that horizontal, and then reclaim. So you could have even gotten in a little later. I like the reclaim of the low because, again, we are day trading here. So I think this was much more simple of that 4402 support reclaim. But even if you added there on the continuation, another great trade. So on the ad, if you look at that routine day trading document, your stop would have been right about 4402. So not even close to tested there. In fact, I think you were tested even less. And you'd still be in it, still be in that runner. You never got back and you never had a retest of your entry. Oh, you did. No, you'd gotten stopped out your runner. So ideal entry is still that 4402. But you see what I'm talking about? That is the pattern. And all my trades come from either one of these 6 patterns or one of these candles. Keeping it simple. Camera's here. There you have it. So that is all for today. I'm going to follow up with the newsletter post Twitch. I'm going to hop on Twitch right now for that electric lunch hour, fun, rough transitions from your favorite wannabe DJ here. And yeah, besides that, all resources are available in the description of this video. And as always, I welcome any engagement, especially on Twitter at Routine Trader. So if you did find this information useful, if you're enjoying the strategy run-throughs, please give the video a like. That helps with the YouTube algorithm, and I would really appreciate it. And I appreciate you regardless. So thank you for your attention, and stay classy until tomorrow.